Hello and welcome traders and my new tutorial for the charting of the ES1, which is S&P 500 futures. You can apply these charting principles to any asset in the world, so I think it's very valuable tutorial for you. I already prepared folders I will be using and filling them with new data. This is pretty much template I like to use. This charting is focused more on swing trading on ES and to do dollar cost averaging as an investor as markets are falling. And secondary Confluence is for Bitcoin, because on Bitcoin when we are pushing in bull market, you haven't had much levels to the upside because you are doing new all-time highs on Bitcoin and S&P, right? But as you are falling to the downside, you are now backtesting critical ranges, AMT levels and other levels where you can find support, and it is acting as additional confluence for Bitcoin. For example, this is like just one example. On Friday, it was actually Tuesday, yes, last week Tuesday, we were retesting 4 point of control, and it was really good reaction on ES, and it was also dragging Bitcoin to the upside. So when you are getting those high probability backtests from big levels, and it is affecting Bitcoin. So I definitely recommend you to be aware what you are doing on ES1. That's why we posted more on our group as well, only those big levels. So we will be doing that. I can also explain why we will be charting on this. So this is S&P 500 E-mini futures on CME. I'm paying $8 a month to get this data. You also have free alternative. You can use Oanda and find the symbol SPX 500. You will get it for free, but I like to pay for CME because there is no delay, and also the data are more detailed, and the levels created from CME are like general market standard. So I like to watch CME because yes, few points matter, and for example, Oanda can have difference 2-3 points, and you actually front run some key level. So definitely CME. And why we are watching futures? So very simple. Futures contracts are trading most of the day. There is only one, like from Monday till Friday, there is only brief break for 1 hour when markets are rolling over into next day. While if you will be charting here SPX, this is cash. Okay, it's okay to do charting here as well, but I don't think you need like do double charting. ES1 is all right because you have more data there anyway. You trade when SPX is closed, and also this is cash, right? So there is no leverage here, and there is this is just people changing underlying asset for the SPX or individual stocks. Okay, so we'll be focusing on ES1 because this is also affecting Bitcoin 24 hours a day, right? So another thing, you need to go back for the settings. We will be using what we'll be using. So we'll be using this turned off because I want to see how charts were operating in the past exactly, and I want to see the gaps. Okay, because we had gaps here, which was market was going for it, then we had gap here. So I want to see the gaps, because if you turn this on, you will not see gaps, there will be rollovers, so I don't want to see that. So that's the main settings we will use. And also you will be using electronic trading hours. Let me go to 4 hour. Yeah, so you will be using ETH, electronic trading hours. You want to see more trading most of the day, because if you change to regular, then you will see a lot less data. So that's what we will be using. So we can start now. Again, this is for swing traders and investors more. Anyway, when I'm buying some assets outside Bitcoin on equities or individual stocks, I'm basically using this, what I will be doing right now, to know what is asset planning to do. I might commentary more also on macro economy, how is the markets looking, because this pullback here can be very similar to previous pullbacks we had on equities. One thing you need to remember, we are in 100 macro. This is a long-term bull market. If you bet on markets going down long term, you are betting against human ingenuity. So long term equities are going up, so that's why any pullbacks are in the end long term trading opportunities. So that's why we need to map support. One thing, however, which can happen, which we need to be really careful, and that's why we also need to map all those supports from previous cycles. But I'm not sure if it's possible yet, but for example, after 2000 bubble, I'm especially focusing on markets for the past 20-30 years, because that's when volumes picked up. Yeah, electronic trading bots is just last 30 years are the most important. What happened before, it was not so important because computers and algos were not so involved and not so volume, not so much leverage. Everything is different now. But yes, one certain possibilities we might get like lost decade, like 5-10 years when you go sideways. But you can still load up at the bottoms of the cycle and do some big DCAs. This is going to be happening only if markets confirm AI is just bubble. Same like internet was bubble in 2000s and then market popped. But let's see now. I'll be showing you some fractal situations as well. Let's start with charting now. So I have this top folder here. This was my idea in the group. Pretty much I want to finish it right now. I can show you. So we will slap it here. The idea was very simple. In previous cycle in 2022, when we had pullback, world was in a fear we will get recession, and it never happened. But similar topping formation was forming here. That's why I like this as a fractal. When you were still like trading at the all-time highs, but you've created some long-term range, like medium time frame range, and then you finally lost the range with first big move to the downside. So very similar situation as in 2022. So for that fractal, so you see I'm starting charting with just a bit the different approach. Then I will be going on traditional things. One thing we can watch will be how much pullback we've got in that previous cycle. And we will be applying same pullback here, but I will turn this off now. We will be returning to that later. We now need to focus on the most important folders. So we will be starting with market structure areas. Some people use key levels, which is very precise level where price is bouncing multiple times. Like for example, this low. Yes, you place key level here and you watch exact level, and then you've got the bounce. But I like areas, yes, because all assets in the world, they have natural volatility, and you can lose level or you can reclaim level, but you haven't lost the area. Yes, like over here, and you can still hold it and bounce to the support. So if you trade key level, yeah, like this one, key level, then you are trying to get reactions, front run, then is lost, you already can be sad, yeah, the level was lost, you start to be bearish, but you still have the whole area to be acting as a support. Then you watch more intraday order flow there, if you are getting stability, if you are getting range, and you potentially bounce on the reclaim. So that's my approach, and I like it more. Areas is much easier for your trading anyway. So let's go to 4-hour time frame. You can see I already have few market structures marked because it was important for Bitcoin. Let me show you. I will be already marking the top one. We need the top as well. So you can see Bitcoin was resisting very heavily at these regions. It's all-time high resistance now. So we go from here. We will set the high. We want to cover this area, and we also can go like this. So we capture all these rejections here as well. So that's great. So we have the top one. This market structure here, you can see was coming from this previous range. You've got, for me, is also important. Yeah, you've got the first reaction, another reaction, then you've got this reaction, and now you arrive to the area. You've got the bounce. Okay, so market is telling you, is watching that market structure. That's good, but you now start to go down, and you start to, like, you lost it and you reject to the downside, and you continue in the downtrend. So this market structure was pretty crucial to warn you. We will see more downside. You also create market structures, as in our courses from the outside, like extremes of the range. Those are the strongest ones. So then you got the 15 of July top. Okay, so there's another market structure. This one is also very critical. I will be highlighting that because it actually accelerated losses to the downside. So you can actually do just higher opacity, so it matters even more. Like if you want to see more upside, you need to reclaim here. Why? Because So first of all, it was big top in 16th of July 2024. Fantastic. Then you are gapping into it, and then you reclaimed it very strongly. Yes, look at that. Two strong reactions, and those reactions gave you all-time high. So very, very key area. And if you wanted to stay pretty bullish on equities, this was your last I mean, you are still holding another support, yes, but this losing this was pretty bearish, and it accelerated markets. Look how much, over 3.8%. That's actually low on equities. Yes, those were two big red days. I mean, at least minimum after losing this, because you lost October lows and also November lows. There was no swing failure pattern there, just very briefly, and market didn't utilize this. You could still save yourself in terms of structure if you do this. Yeah, push, reclaim here, and then reclaim into the range, and then again you start to trade this range. Okay, then you might come here again, reject, or you will be going for all-time highs. But you see, this scenario never happened. So this is critical market structure to reclaim in the future. So I will have that on chart. This was more minor because it was secondary top of August, multiple days of rejections. How many? Or 2 weeks of rejections, then we fall down. So it was more it was not so strong market structure. I will, for now, you can see on a smaller time frame. I will keep it. I already changed the color. We can do local naked because it's not for me. It was not for me as that strong level. You can see also like market is bouncing from past week, but is still unable to reclaim this area. Yeah. So if you want to see more upside, you will need to start like doing new range here, then continue into this, and we will see decision points here if you go down, up. So I'm keeping that on a chart for now. Let's go down. So we need more market structures now. This was range bound conditions, market going sideways. You don't have any market structures here. You can do naked one over here because key highs and lows reversals are very important. So this is still naked retest. Market can come here. Yes, can come here, can do swing failure pattern, reclaim and bounce. So this market structure you definitely need on your chart. We just need to do it like this. Very good. You will also watch, 2nd of August 2024, this was a big deleveraging in the world when yields on Japan were, leaving heavy bear market of the many years. So we've got the big pullback on equities and also on other assets. This was big drop. So for me, this is going to be kilo as well. Watch, you will capture weak market structure like this. Okay, so these are naked retests, okay, so which can give you new expanded range reaction in case you grab liquidity and stabilize. Let's go to daily time frame now. Daily, we can actually just want to watch. Let me check because I have also some older levels. Okay, so longer market structures are below. So we will be charting. Okay, so we'll be charting everything down to 3.5 thousand. Very good. For our market structures, for our time frame again. Now you can also extend these lines so you understand why this happened. This was backtest. Okay, so we will be doing like this backtest. So when you are doing a big pullback, you are checking why you stopped and what was market paying attention to in terms of backtesting, like bullish backtest. So you were backtesting this area from this market found support. So, and this already had this was rejection, then push, bullish backtest. So this is now long-term market structure, not long-term, medium time frame, and normal because it already had first backtest. Now this is still naked, right? Because you had no bullish reaction, no backtest, no bullish or bearish backtest yet. So you can do it like this, so you understand it really well. We can do one more here. these highs like this. Okay, you've got March top and also the March top and May top. Okay, like this. We can be aware of that as well. This is 2024. Yeah, so this is bottoming formation. 8-hour time frame we can do. You see, I'm charting this on higher time frame. Yes. Now we'll be looking for more naked market structures from the uptrend. So this is still waiting for the backtest. We have this one as well. Like this. This already was retested once. Like this. No retest. There is a gap here. This was big top of 2023, right? Actually more. So we need to go to 8-hour time frames now. This is 2000. Oh, this is 2020. Okay, we need another one. Wow, this one is really strong. Actually, it starts here. Wow. Even here. Wow. This is more like long term. We will be extending here, pushing it a bit down, so it covers better. So it was in the past support, resistance, not much reaction, resistance, 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 flipped into support, flipped into support. So this one is extremely strong. We need to highlight this one with better color so we understand. We might get another big reaction from there. This is ultimately like if we get like into full blown crisis, for example, you will be moving down like all these impulse, you will be moving down into this, and then boom, this is proper support after such impulse. We can also map more supports from this. We will be going over here. And ultimately we can go from here, and I will be marking this bottoming formations. Yes, we don't use head and shoulders on Bitcoin, of course, but you can clearly see bottoming formation. So you want to capture this whole bottoming process, because in the end market will be looking for very heavy long-term swings down there. So let's go like this. Let's include this. Yeah. One more bullish retest can happen here. This is more of a naked. This previous high. Okay. Starts there. All right. So local market structures, and not much local because we are on high time frame. So this is medium time frame and higher. Market structures are already mapped. Their focus is again on backtesting all those supports as we fall. or to show you signs of strength. When you reclaim, for example, reclaim of this will be first good step. Like you really need this one, then this one, then this one, and then only then you can start thinking about back to all-time highs and to rotate this range further. So now we are pretty much done here. We go like this, turn off. Now the most important part, of course, is AMT. I already have these three ranges map because this was I was using that for Bitcoin trading more recently. So we can see we have one more range here, and look why. So we go to 4-hour time frame now. 4-hour time frame. Again, why is IMT important? Like if I would have to choose like top 3 tools, then IMT would be every time in any strategy I use, scalper, day trader, swing trader, investor, whatever, IMT is number 1 pick for me, of course. I need to see, because it's pretty much perfect. You can see how we are ranging at the top. Now push to the upside. One more, like try to save the VAH of the range, but it was clearly lost. Now, as you lost that range, you started to move to the downside. You were retesting. Market was also giving. By the way, you got the reactions from most of those pools. You were getting reaction because now you have the VAL here and also VAH. So double. It was green day, so very profitable day for you from AMT. But again, it was lost. Okay, it was lost. So where you go now? Where you go? You go to revisit 4-month range. 4-month range. You go to revisit that. Do you see where we are stopping now? It is point of control and high volume node of that range. The main support of, before you reach further levels down. Okay, so AMT is guiding you. Let's now do more charting and map levels even more. So we can clearly see there is another range here. So it started from this point. Yes, we are going like this. You are doing backtest, so market is telling you you can do easy AMT pull from here. You are returning to the highs and you are doing this and you are leaving the range over here. So you will stop the pull over there. You will not pull further. So let's go to range now. We will be starting here. And we will stop once market was leaving clearly to the other range, which is over here. Again, it's gonna be blue color because it was taking a lot of time. I use ice color for range up to 2 weeks, I think. And blue colors are done when it's more than month. Was that more than month? Yeah, of course it was few months. So we do blue. Now you don't have much supports here. It was clearly no range. It was big impulse. We can check volume. So later on we will be checking. We'll be checking volumes here to find support, to find future point of control and high volume nodes. But you can see you've got more smaller ranges here, like this one. It was impulse move, so another small range here. So we can map them actually, okay? So let's go to our time frame. We now drop to smaller time frames, 1 hour time frame, so I can see that impulse better. We will be now marking the smaller ranges, which were taking some time. So this one, we can start over here. We left it over here. Yes, we can do ice, another one here. Yeah, like that. Another beautiful range from here. Can include the impulse as well. So we go from impulse and until market left that range. So here. And this one, so this one, how long it was taking? 2 weeks, that's fine. And this one was longer, yeah. 14th of December up to, so more than a month. Yes, we can do blue. The colors are important, yeah, because then you know it's more significant volumes and a point of control out of it and stuff like that. Very, very strange range here, but we can mark this one as well. Takes so much sideways. How long it was taking? 14th of November. Less than a month. Nice. We go to 4-hour time frame now because we will be mapping in case equities will give us big deep pullback. Then you see Bitcoin was equities were ranging for a very long time This range, wow, that's so old. First you will be marking more naked volume, so let's go back to 4-hour time frame, which is untested volume in the uptrend. So on higher time frames, because then we go to high time frame, then we will be marking this as a one huge range. But on this time frame, I will do it like this. So we'll be marking first. So you've got the bounce here, retest. So I will search for this area. Before gap. Let's go. How long was this taking? 6th of April. It's a long time. Blue, and then we have another one at the bottom. From here. Okay, that high I'm watching where it's leaving, yes, like this. Yes. I think this is good. Let's go to wider time frames, how it's looking, if it's covering everything. Look at that bullish backtest here. Because in AMT, when you are in strong uptrend or downtrend, that's how you will be defending. This was absolutely textbook defense over here. Look at that, yeah. This window of opportunity when you retest the VAH and point of control and high volume node of the previous range. Imagine that as a good friend coming to visit you, yeah, to have a few drinks with you, and you are getting very good time. There are no fights or something. Everything's going well. Friendly visit and friendly reaction. Unfriendly reaction would be acceptance into this range, spending time there. Then you start to think about going into this high volume node, going for the full range rotation. This is what you want to see. Yes, that's absolutely key for trading such, for trading any AMT assets. Okay, so I mark the ranges. Now I will need to mark the levels. So I just will be borrowing levels from here. I need to unlock, and then point of control as well. Unlock. This will now take a bit of time. So if you don't want to watch this, you can skip. But it's very much needed. I'm doing this from 1 hour time frame. This is most precise for AMT levels. Yeah, we'll save the chart. So we have 6th of November, 27th February. So November, December, 4 months. Four-month VAH, 4-month VAL. For point of control. Naked. Yes, now it's waiting for retest. Or you might get another. If Bitcoin pushes and it tries to rotate the range, then it's gonna be pretty likely you might get a good reaction here. Yeah, because traders will finish range completion, so longs will be taking profit. Plus you have point of control, heavy one to breach. So you might get another lower high here and continue down. So definitely good area to watch. What you also can notice, this range has really fed volumes, and it also has more secondary high volume nodes, and you can say naked point of controls. So that's why we'll be marking in another section high volume nodes to be aware of these internal resistances they are not in extremes of the range, but more like here. Okay, let's start marking further. So this range was 19th of September, 19th of October, 6 weeks range. 6 weeks. Point of control was already traded. You can be, we will be marking high volume node, but it was already traded, so no need to be marked anymore. Let's go here. How long was this range? So from May 4 months. 4 month bar. 4 month val. And we need point of control from here. So very precise reaction, and I'm keeping. I will keep this point of control still in my odds, if in case we oscillate at the lows around there. If I see this getting lost and rejection from me, then it's gonna open the road for more downside. So for now, I'm just keeping it. Okay, so that range is marked. Let's go now further. $124 days, that's 4 months again. Oh, very interesting, right? Do you see that symmetry? So equities tends to range for 4 months, like this cycle, like multiple times already. This is not coincidence. It's already giving you useful information for the future. We might see similar thing on equities later on. For example, in bear market, then equities might range for this time exactly and then bounce. So you will always pay attention to these subtle details. Yeah, you need every single advantage you can get. So now this point of control is naked, waiting for the future retest, and it's a good one because the volumes were truly high on it. And then you have secondary one here. It's almost like same. So I can do it like this. We will do if I see volumes are super close, then I will literally mark 2 point of controls. So I will go here and I will mark it as a secondary. Secondary. As you have not much volumes here as well, so you can do rotation and then bounce from the val and point of control. Those are juicy setups for the future. So this range, so this range I cannot actually use because it was already traded. You see, if you were losing this top range, and then you were going for friendly visit of this range, and you were holding the val. So this range fully played out, but you will be watching. Because this is naked. We want to see the naked untested volume on the back tests. So we will watch this range here. We do ICE. Let's do the levels. We actually, okay, it was, whew, that was brutal. Okay, do you see how empty works? The empty just works. There is no doubt about it. No doubt about it. Already even now when I'm showing you these previous reactions from the past. So how long was this range? 17 days. So we can do 2 weeks. 2 weeks. Vach is no longer naked. I'm marking letter. 2 weeks Vach. I'm keeping this level. I'm definitely keeping this level because we haven't had any further interactions. Very, very strong reactions. This was actually your last time you could be on top of bull market from that range, from that small range. So keeping that level, we need the val of that range, and then we need point of control from that range, which was not tested yet. It's 2 weeks. 2 weeks POC naked. Perfect. Now we can continue down again, same thing. So this range was sorted out. This range was retesting already that range, so we can do. How long was this duration? 2 weeks. 2 weeks val perfect is matching. Good, and then I need. Oops. Then I need. So this range was not pretesting that, so it's also is ready for test. And we need POC. Two weeks POC naked, very good. Very good. It starts to looking good. How long was this range going on? 36 days, so 1 month. Wow. Vach and POC. Yes, this is most important. Like if you don't do your homeworks, if you don't prepare your charts, you will be always acting as a deer in headlights. You will be influenced by the news, like sentiment, momentum. No, you need to prepare your charts. No matter the news. You can see market even now is stopping on very, very strong technical level, which was form on point of control and high volume node. Impulse, no support build up. We have the small range here. We need to mark very likely just how long? 2 weeks? Actually longer. 26 days. Almost month, so we can do 1 month again. Vach. POC. Naked. Now we come to big ranges. All right. How big is this one? Saving the chart. I will mark this from this yeah, we can mark this from higher time frame. These are so long. Can also do this this local down there. Okay, 2 more marks. Duration 248 days. Okay, 248 8 months. Wow. Color Bach. Point of control 8 months. Pock and naked. Same thing here. Oh, this was even longer, I think. Mm, 400 days. That's like 1 year. So let's do 1 year. 1 year. Bach. Val. And the point of controls are matching actually. So we could do here 1 year. So 1 year. Okay, that's good. We can return back to highs. Now we can do this. We can move all of them into folder here and move all those to the top. Well done. So, and then we go for our time frame. Final touch you can do is to mark yourself which one is naked in the future in case there is large volatility. So you know the level was never back tested, so you know the the reaction can be very juicy. So I will mark all those. So this is naked, very good. These all were traded. Now these retests are now naked. This one is naked too. The value from that range was breached already with the big pullback during August, so this is not naked. Not naked. So on this point of control is also not naked because we breached it here. What else? 2 weeks VAC, we can move this to the top. Also colors, I will be changing colors and then we will be, so you know, it's different magnitude. Okay, very good. So we have form on val here. This is also naked. Naked. And pretty much most levels below will be naked. Maybe I will be marking it that like similar to npox. It's looking more pleasant. This one is not precise. Ah, yeah, because it's 4-hour time frame. Okay, so it is precise. Just POX I will be doing like this. Yeah. Okay, so we are almost complete with AMT. Yeah. Let's do final check. 8-hour time frame. Yes, this is all older levels. Yeah, okay, we are ready. We are ready for AMT. Good. We can now turn this off. We can actually still leave it because we need high volume nodes. So we already have one here. Okay, it's stretching too far away. Need to make it smaller. Yes. Somewhere here. 1 hour time frame. Okay, so you can mark the where is the most volume traded. So we can do this as a node. This is going to be main, and then we have secondary one. Secondary one is here. Sec. Anything else? This one is also. This is not so big as the other one, so I will not mark it. This one we don't need to mark. I can go to higher time frame a bit. It doesn't matter here. From Bitcoin I will borrow this one, the gold one, which is for smaller time frames. I will also need the bigger ones, multi-mont. Yes. Okay, so we have smaller one and also this one for very long ranges. Good. It will be mainly for this older. Yes, for this one. We'll prepare later. We can also mark this one. It's also secondary. So this is main and secondary. sec. So you see how it's how is price ranging in between those two. Yeah. Two weeks extent. Very good. Now we can continue further down. Okay, this is main. No, this is secondary actually. Secondary. We have multiple of them. And the main is down there. Main. Secondary. One month. Any small ranges? Oh yeah. Is this 1 month really? Yeah, it was not full month. Okay, so then it's correct. And now finally big range, longer duration ranges to be marked. So like this. So this is this main? No, it's not. Okay, main. main, and then final one. Secondary. Just need to change here to 1 year. 1 year. Okay, larger time frame. Good, good, good. So this is all set. Okay, high volume nodes are set. That's done. We can also mark the low volume nodes, so we can assume where price will be trying to fill some volumes. There is a smaller support also. Let's move this here. Okay, I need to borrow from Bitcoin. Where is it? Maybe it should be here. Mm, 4-hour time frame. Here, I'm just watching this volume profile here, this deep. From each volume profile, I'm trying to find the least volume down. Very likely here. We have one here. In between the ranges there was big impulse, never back tested, so like this. Another one is starting from this low down to this range. That's a biggie. And another one in here. I'm marking this one as well. You can see not much volume traded, like pretty low, only in the middle, but also this was impulse. So this is combination of local to medium, so definitely needs to be marked. And in this range, there is an area, definitely. Below these lows, up to here. This is all looking decent. Yes, volumes were traded. Need to go to 8-hour time frame and move things under the price, and we are done with the high volume nodes and empty and low volume nodes too. Yeah, that's good. We can now return back to 4-hour time frame and save the chart. Saving the chart, moving high volume nodes and low volume nodes into this section. Once everything is done, I will be showing you high probability bounce areas based on all the informations. So, market structures done, VA is done, high volume nodes done. Let's move to anchor VWAPs. Very important part of our trading. So this VWAP is now needs to be made wider. This is measuring, and you go to higher time frame. In 2022, we've had very decent pullback on fear of recession, 26%. Out of that moment, we do have anchor VWAP, which is tracking volume in the current uptrend. You can see once we gathered volumes and we deviated from it really well, on the backtest we held it. So this was your price was giving you information. It's now confirming bull market potentially once you take out this high, then boom. So this is going to be extremely strong support, should be on the retest. It's still, so it's 20% from the all-time highs, and very likely 14% from our current price. So this is anchor VWAP number one, and then you also need to track anchor VWAP, which was causing the latest impulse. Yes, all the AI was pricing in this impulse. So we need anchor VWAP from that moment as well. We can go to 2-hour time frame. So it's pretty precise. This is the reason why we chart on futures as well, because you've got a lot of data, yeah. On S&P you would have so many gaps, non-trading and no trading. Uptrend. Yeah. Good. Now we need anchor view up from the top, which is now measuring potentially pullback or bear market. Yes, from this all-time high downtrend. We can see price is still not showing you, like sure we are bouncing here, right? But this backtest, front run backtest is still showing you bears are still in control. 2-hour time frame. Yeah, 2-hour time frame. We also can have anchor view up for people who are buying and not just buying, but there was overall consolidation at the top, so we can have anchor view up from that as well, because these people are now trapped. So you want to see when price reclaim that, and here they will be untrapped pretty much. There will feel less pressure. So let's start. So we were bound. We can actually start from this point, I think, because this pretty much, this was a bit smaller range here, but it's also part of the structure. We can go from here, sure. Now this is now range view up. You can clearly see market was paying attention to that. These range view ups, you know how it works, is more of a bias, yeah? So when you trade above, you have open road to the upside, lose it with proper, and you open road to the downside. So make a test of it. 4-hour time frame. This 2nd of August, yeah, this was our latest dip. Similar magnitude, 10%. You also can have anchor view up from that point. We can do it from smaller time frame, so it's more precise. Uptrend. This is anchor view up for people who bought the dip from August. They are also underwater. They are getting underwater. There was a front run here. So you see how it's converging here. Yeah, you would need to reclaim this to the upside. Yeah, anyway, let's continue charting. I should maybe, yeah, but I'm commenting what I'm seeing anyway. 4-hour time frame. So, okay, this is 2022, and ultimately we do have we need to track the anchor view up from corona lows as well, in case we get into very deep bear market. It's pretty much all we need. One more. Yeah, but this is also higher time frame, so I think these anchor ups will be included in higher time frame, right? Anchor ups, do we have them? No, we don't. Oh, it's okay. You were also ranging in this section for a long time, for many months. So we can do anchor up from that point, and this is going to be it. Range. So it's going to be another supportive line when, in case this one is lost. Yeah, so you'll view it as an area. Okay, so this is now done pretty much. Order blocks. We can marble only the big ones. I need to copy that from this chart. We will start with 4-hour. Okay. This one. Very nice reversal. So we need that. And little one there. Not even sure if I should mark such a little one. I will not mark it. Good. Now we go to a higher time frame order blocks. So daily, daily. Now the job will be easier because we have less and less. That's pretty much it. Further. Three-day order blocks. Now we see a lot of Confluence in this area, very interesting. 3-day. Weekly and monthly. Oh, okay. Weekly order blocks is here and here. That would not be nice if Bitcoin, I mean, if equities would crash so much. And monthly. Yes, and we already retested that monthly order block, which means needs to go like this, and then we write ourselves rest of the body. Okay, done. We can remove this and order blocks are done. Swing value patterns now, which is mainly highs and lows, critical ones. Major swing value pattern, all-time highs. We'll go on 4-hour time frame. Okay, he's just based on where is the key high and low placed. This one major swing value pattern is where you have end of the impulses or key structural break on higher time frames, which can bring bear markets, bull markets. So here definitely this is end of the impulse. This is more medium time frame. If taken, you will go for gap fill, so we need that one. This is the low of 2022. Yes, so major. Low. Okay. Okay, it seems we have all the key lows mapped. Also from 2020. Yeah, that's good. Yeah. Fibonacci. Yes, so we have this main pool. We can start with this one. So from 2022 low to new all-time highs. What's that point? $6,166. Okay, that's done. And now we can turn on some Fibs. 0.5382. Higher time frame Fibonacci, perfectly fine to watch for equities. Just from this low we will move further. So from 3,502. And we can write text. Bull market impulse. Yeah, and then we need also 0.86. We also have more local pool, which is like August 2024. I will keep only golden zone. How was this reacting to price? We've got daily bounce from there, midline ignored. So market ignored 2 levels. We can keep just. Yeah, that's more local, and you can also watch. So this is bull market impulse, and this is you can watch one more pull from here. This is also important low. So from this, yeah, also need, because it captures the impulse. Another impulse, so another pull we need to watch. You can make this wider, because this is the main pull you watch. Ultimately, so this is now for pullback. We can do one more section for Fibs, and you will be measuring. You can also always check what the Fib was held from in previous pullback. So you can see in previous bear, it was not, I mean, like technically bear market starts after you lose 20%, yes, since all-time highs. But you see, then we reversed. But in previous previous cycle down move, when world was expecting recession, we never got it. We've got 0.5 pullback. So we can actually, we can keep just that. So we are aware of that. Yeah, that it was held. So, and this we can make it smaller. We can do this into Fibs high time frame. And if we hide these Fibs, we can also do like even bigger pull from this low, from Corona low to all-time highs, and then do $2,174. $2,174. And text. Corona. Pull. And that's again for higher time frame Fibs. And now we can hide them and move them. Good. So we are done with Fibonacci. Now let's chart daily. This is naked daily open. I mean naked close, which we'll be retesting. Look at that front run, but nice reaction. Yeah, it's very powerful. Here. And more. Good. 2022, 2025 covered. Naked weekly. Good. That we also have. And finally, naked monthly. Backtested. That's it. Yearly. Fair value gap as well we can do in this like that. Okay, this is done. Smaller time frame now, 4-hour time frame. Why is yearly here even? Can go here. Trend Fibs extension. Let's see what we got here. Oh yeah. Oh yeah, that's a goodie. That's why I watch it. This is same like on Bitcoin. Markets are very predictable, especially in Symmetry. Do you see what we just did here? This is also why Bitcoin topped out. Bitcoin had similar extension. This is first impulse, one pullback, key low, and then same thing which happened here. You were expecting with similar magnitude happening here. And now, 2, 1 to 1. This is your major pull for big time frames. Definitely. And in the future when you will set the final low of this market and you will be breaching this all-time high, so let's assume, yeah, just as an example. So we go to trend fib extension. From here we've got the high. Let's say the low will be somewhere here. You can use similar principles. Once you take out this high, you will have 1-to-1 target here. Yeah, so easy. We will be deleting this one because this is just prediction. So we have the main pull already from Corona low, right? That played out beautifully. We can do what we can do here. We can do extensions out of it. 1.5 in case we take out this high, and the structure will, like, until you trade above this low, you can still track this trend fib extension for years. I can do 1.5 there, and more locally, well, let's see what we've got more locally, like super, like this is high time frame swing trading, so I don't want to do anything like too small. This was just impulse to the upside, not much done. You will have another one here in, yeah, but it still didn't complete, so you need to push, then you do pullback, and then take out this. Then we will have another trend fib extension to the downside, which market will be watching, so nothing to be done here. 8-hour time frame. This is the uptrend, you know. You also had this one. You can already see it. Yeah. Okay, so for me, no action in trend fib extensions. Maybe one more here. Let's see how market is tracking it. One to one was tracked as a zone. Yeah, I can keep this pull as well. Just need 2. Two is just above. Balance zones, the things will get better here. Daily time frame. We can extend this for 349,850. 349,850. Yes. 349,850. Oh, another precise pull. So you can see from August pullback, we've already now, you can see it's very clearly range, because we were also backtesting this high. So like this midline got retest, held, very good. You are attacking all-time highs, and from this, you are getting one-to-one extension of this range to here. So another big reason why equities are at like topping out is this. Now is gonna be question. So we can assume the new range will be formed here. Higher time frame range from this top. Let's do a different color like this. The border can go away. Now the main question will be if we stay above the 1.5 extension, because the bullish consolidation should happen here. This is going to be green. Yes, because as you lose 1.5, you will be heading to retest previous range market structure, and you will be creating larger range here. And that would give us 20% pullback, same like here. Yeah, nice. This is symmetry. Symmetry fun. We can watch these. Good. So that's balance. Oh, we need to go like this. 4-hour time frame. We also have 1-to-1 here. Balance zone to the downside. More local medium time frame pull to track for further downsides. Gaps. I need to borrow a gap from here. Where are you? I focus more on watching gaps on S&P, SPX. Here you've got them most of the day. It's a direct confluence for Bitcoin trading, but the long-term gaps are also occurring on ES. Then you know something really strong happened because you didn't feel it, but you know the drill, right? When you feel the gap, as here, we're getting bounce. So gaps are very important for us. This so let's see where is other gaps. Where are they? Another one is here. This is only gap. It seems like it. Yeah, only gap on ES1. Another folder, Symmetry folder. Useful, very useful folder. So you can build your statistics and just watch how much was market performing to the upside and to the downside. So we'll be measuring, measuring key pullbacks. Is it coincidence? Like you are bouncing same, like 11.65%, same thing happening here. Yeah, you see the previous, like market participants, all of them are watching Symmetry from previous pullbacks. So the value buying is already happening here because people bought the dip, same thing in the past after same magnitude. Yeah, so that's why you use this folder. So useful. But we also need this folder not to, we can measure upside, so we can measure like big cycles. Yes, so the overall returns of the market, so we can measure these up to this point. Very cool. 50% since 2023 lows. Another nice pullback, so I can measure. %, that's like small, don't even need to watch that. %, and also I want to see the big pullbacks. Okay, so 2022 I definitely want to see. Okay, so you can see much more serious on recessionary fear at that moment in time. %. I will probably do this on just on pick the right time frames. And we can also measure the Corona pullback. This one was crazy. Oh yes, indeed. $2008. $51. Okay, that's all we need. What the previous cycle, like previous deepest correction was what interests me the most. So 37%. So we repeated this symmetry wave, this pullback. But in case we repeat 2022, what I will be doing is to watch where is 37% pullback from current highs. In case you go beyond this symmetry, okay? All right, that's all I need. So that's pretty much done, like the core basics of the medium time frame. Let's see what we have on higher time frame. So Fibonacci is already done. Market structures. Yes, this is what we need to do on the big time frame. Pretty much have them already since Corona lows. It's like market structure, which includes, let me show you here. So for example, yeah, I already included them here, but I will be adding few. So I need previous market structure, like all-time high from this, from previous all-time high top formation, from previous cycle 2021 high. I need one big market structure to watch for very, very big time frames. And then I also need this. So I'm seeing these multiple market structures already. Stop market, I can merge them into one big one. I will be extending over here. So I know this low is included as well. This low is also included. You see I'm using daily time frame, so much bigger can be deleted now. So from this perspective, you you can identify this needs to be acting as a support. So this high holds, this is more like most clean, and if you start accepting into this major range, then you can do this. Did I include? So these market structures are fine; they can be added. I don't think we have a. We still need this big range here, do we? Yeah, because I was including mainly naked ranges and naked volumes, so we need this big pull here also. So we do this time frame, daily time frame, and I need this to be borrowed from Bitcoin from higher time frame. No, not from this one, from macro range. This is macro. CME gaps can be turned off here. So many folders. But there is order in this. It's not random. Nothing is random. Weekly time frame, and we need similar thing on ES1 in case some huge panic. So copy that. Very good. Also levels. Macro VAH. Macro high volume node and macro POC. All right, we've got it all. So we will be watching this pull. Daily time frame. So let's see where we were bottoming out. It is low. Okay, so I need to equal that. Like this. Very nice. You can also do macro pull on Corona. But in case market falls back into Corona lows, this would mean very serious consequences for you all. I don't know. I don't want to even chart this. It would be very bad. Imagine you crashing 60%. That would be 2008 financial crisis or just COVID crash. But there is no things like that in current economy. So we should really hold. equities continue like a macro uptrend, macro bull market, so they need to hold in this range. So this range will be fine. In case it's lost, I will be charting here as well. Maybe I can do this pull. Mm-hmm. 2017, yeah. Okay, so let's go here. So how long was this range going on? 1, 2. Over 1,000 days. Three years and 10 months. So we can do it like, so from 2020 to 2023. Mm-hmm. 3 years. High volume notes. Yep, that's done. That's done. So what we can, yeah, we'll go over technical analysis at the end. Just very quick summaries. All right, so we need new folder, macro VAs. That's going to go to high time frames. Okay, so that's done. This is also done. I'm just watching if we get one more market structure. Yep, that's good. Balance zone. What pull we have here? Yeah, we can do macro pull from like this. You've got the macro pull, just need to be precise. Oh yeah, like this. 125, we can turn off, it was no. Yes. Okay, from this balance zone pull is from Corona low, 2020 to 2021 high. In case we continue bull market, then another targets will be 175 and then to 7,400 in next few years. This is macro continuation pull. Yeah. We have pitchfork. I don't trade much pitchforks. We don't need these channels. We can do few channels as well, and that's I have a very nice channel here. What? One day time frame, bigger time frame. Channels will be deleting. Three days. Oh, it's extending lines. That's why it's shooting. So again, from Corona low, which was the start of the proper bull market, we have pretty aggressive channel. Let's go to smaller time frame, 1 day time frame like this. Let's make this smaller a bit. Why it's so fat? Yes. Let's do it precise. Okay, that's done. So future support from channel is over here. It's the main channel to watch for us. Cool, yearly done, very good. So I made the main charting now. We can do very quick technical analysis from what I see here, and that's going to be it. One more bonus. I'm watching, so I'm not a big fan of moving averages, but I do watch the 200 weeks moving average. Is usually when I go to 7-day time frame, it's usually when the assets, where the assets find bear market lows on good pullbacks. 2022 support, quickly lost but regained. Support. When you trade below also is a bearish sign for you. When you truly lose 200 weeks moving average, you usually get, so right now we are doing 12% pullback, 20% pullback will very likely come into it. If you lose it, then it's gonna be like green light for you. We might do bear market like in previous and in history, 50% and 30, 40, 50% without problem. That's one moving average you can watch on these high time frames. I don't trade with them on smaller time frames. It's just institutions generally watch them to load up. Then we have a 200-day moving average. We can do another color. This is even more color, yellow, smaller time frame, 8 hours. And this is how it looks. Again, I will show you just two previous cycles. We can actually, I can show you 2000 and yeah, let's go 2008, so you'll see the cycle. That's just too far away, never mind. Daily time frame will be better. Okay, so we have much better tools like Anchor, Avwap, and other things for us to trade. But moving averages, like the whole institutional world is paying attention on equities. So with 100, like with 200 moving day average, it's the, what is it? Like I would use it as a warning sign. Look what happened during 2007. We've lost it and then we started trading below. Yes, again, retest, lost. And then we've got like 50% drop. Okay, so we were trading below for very prolonged periods of time. Now you are bouncing out of the financial crisis. Finally, you start to reclaim it. Look at that. There was like good battle around reclaim. Then you don't even like, some people don't trade equities when they are in bear market, but they wait for this reclaim and then they go in. Yeah. Sometimes spend below, but it technically, if you were watching other things, it was okay. Market was just ranging. Again, move above, then you are spending again price below. You can combine this with the 200 big moving average. There was big battle here, and now look at that. These are the most impressive bull markets when you truly reclaim this, and you are now trending, and you're trending above. You don't even need to kiss it. Yeah, the time spent above is what matters more. Again, bigger pullback because you are starting to lose it, spending more time below. Again, you are trending above. Big correction was anticipated. Where it stopped, look at that. Again, we stopped 200 weeks moving average, 200 weeks moving average. This is fantastic, you know, for high time frames. This is my Corona actually destroyed all moving averages. People were totally getting wrecked. But again, a lot of market participants arrived into the market only with 200 weeks moving average reclaim and then 200 day moving average. And since that moment, another crazy push into the December high. Yet again, look at that. So there was choppiness and battle here, but in the end, it resolved to the downside. So again, warning you, more downside is coming, deeper collection, retest, reaction down. Where you stopped, 200 weeks moving average. Now market is curving beautifully and now starts to reclaim. He's already trading 200 weeks moving average and above, and now he's reclaiming 200 day moving average and is pushing to the upside again. Strong cycle. And now what we are seeing again, first warning sign. So we've lost top range and we also lost this 200 day moving average. So it's gonna be very interesting what we do here. Do we chop and then roll down, or do we reclaim and continue up? So you can watch this. And again, this like the strongest support for us from moving averages is coming now at 4,670. We will see if we get similar magnitude. It is now distance of 23%, which is going to be similar symmetry as this pound. 24%. Very markets are symmetrical. So I started with moving averages, which is not ideal, okay? But let me do another technical analysis. So I will have to turn on everything. So first, so we can start with market structures for 8 hour time frame, so I don't lose. We can turn on market structures. I'll be just overlapping them. So from AMT, technical analysis for AMT starts here. For For now, we are holding this high volume node for one point of control, which it was helping Bitcoin to push to the upside. So very, very good. Once you lose this area, you see where is the problem. You have declining volumes here. Market will very likely be populating area with volumes, and you will be watching these lows to fill low volume node or medium time frame, and for the bullish retest of 4-month val, which is naked, and also 4-month VAC. So you have double AMT reason to look for longs here. Yes, for another few green days, few weeks, a few days of green days, or just one bounce. But yeah, this is future support from AMT. And then as you will be dropping down, you have further high volume nodes to watch. This big low August pullback, massive volumes were done, potential for swing failure pattern also high, because we have many point of controls below. So that's what we will be watching next. Ultimately, if we decide to go for much deeper pullbacks and fill the whole impulse, previous range, like these previous two ranges and the previous range will be acting as a support. Ideally, we do bullish backtest. From market structures, you can see this market structure also evades retest. So as I shown you already, you are adding Confluence on top. You have AMT Confluence here in this zone, and you also have market structure, like very strong one to be retested in this area. So again, very nice. Another pivotal market structure for pullback, for bounce, another one. And this is highlighted one. So if we go for deeper pullback, financial crisis, whatever, you want to market to find like big stability here, because it's going to be also market reset after the impulse. Ultimately, if this is lost, then you will be building new multi-month or year range and then bounce. I'm bullish long-term on equities, unless we get 2000 .com bubble, which is unlikely because AI sector is still growing. It's still just on the beginning. So yes, valuations were pretty high, but nothing crazy. We should just, put all over high in on these higher time frames. Anchor Avwaps, again, we are rolling some local ones, like medium time frame ones, but still we watch this one. Yeah, this one as well from Corona low. So you will be tracking all of them. Orderblocks, multiple of them in areas, Fibonacci. We are holding double Fibonacci's right now as well with these more local structures. If you repeat similar symmetry as in 2022, then 0.5 will be holding for 4,800s. Bull market impulse, like this is area where bulls really want to defend to not get into bear market. So this big golden zone here. Naked daily, weekly, and monthly levels, we definitely will be watching from daily time frame. Yes, they are at good area. So here, you will be watching, and others weekly. Very nice on pivotal areas. On all criticals, they are lurking. Same with monthly. How is looking monthly time frame? Yeah, this one, 5,000. Then you have this one as well. Why I didn't mark it, I don't know. Where is market structure monthly? Yeah. Like this. Let's go further down. Video is already very long, over 2 hours. So I'm doing like this fast analysis. Trend fib extensions, we can turn on the midline of the pullback, because markets generally hold the midlines, so we can turn on the midline here on 0.5. To watch for the pullback, because it is also previous 2021 high. Super simple there. Balance zones. Smaller time frame. balance zone. This is balance zone for previous bull market, for previous pullback. 1-to-1 extension was reached to the dollar, and we are pushing back into the 1.5. You want to hold this for bullish consolidation, lose this, and you open the row to fill volumes into the 4,797, which is going to be creating new higher time frame range here. Lose this, you get acceptance below this low, and then you will be again going for retest of this midline, and then here, yeah, so you return back to range. Don't forget about power of extensions, yeah. This target, since we breached this high here, this target at 6,162 was predicted from this point to here, yeah, because it repeated similar symmetry as from COVID impulse, same impulse to the upside. So pullback from here, absolutely zero surprise on, same like Bitcoin, this is precise. We have only got one gap to the downside on ES, Symmetry. We will not discuss today macro VAC. So ultimately, if we, you know, depends how bullish vectors we do. This, but I will be watching this first area to be defended on equities for deeper pullbacks, for during financial crisis or recession. This market structure needs to hold, and then VAC. Yeah, if you start losing this area, then you'll be focusing on these high volume nodes. Ultimate support box is here. If we measure 24% from lows, from highs, and down to here is 37. This one would repeat 2022, and this one would repeat previous more serious pullbacks. For future bull market, 7,426 big target. And we have this channel again. Support at 4,500. So that's it from me. Very simple analysis. I hope you like it. You can repeat same thing on other assets and you will be doing well. Just basic principles. There is no order flow here incorporated, so because you don't need it on these huge time frames. All is all you need pretty much. I don't do any Elliott waves or other things because they're unreliable. You can have bull market and bear market views. Here I can say with very high certainty what is like what the possible scenarios to be on the table. Thank you for watching, traders. If you like it, just give it a like. If you want to trade with us, join our group. This was a special video. Otherwise, most videos will be on Bitcoin again. Thanks for watching and have a good trading week ahead. Bye.